Hello, everyone. I'm Cindy Edwards from PR Media Now. With me to discuss today's big news from Atlas Salt is Rick LaBelle, the company's newly appointed CEO and director. Atlas Salt, of course, owns North America's premier undeveloped salt deposit in Western Newfoundland. Rick, thanks for joining me today as we discuss the independent feasibility study for Great Atlantic released by SLR Consulting. It is the blueprint for how construction and mining would move forward at the first salt mine in North America to be accessed through declines versus vertical shafts. Now, first question for you, sir. Investors have lots of interesting numbers to examine here, but the market is a forward looking machine. And one of the most important questions on the minds of investors now is what's next? With the FS out, what's the game plan? What can investors look forward to from Atlas over the near term, the coming weeks, and the balance of 2023?
Sure. Cindy, great question. The absolute first thing we have to do is complete the assembly of the management team. We are going to be announcing by the end of September a fulsome, comprehensive team, a world-class team. And at the same time, the first thing we have to do once this team is assembled, and we're actually started already, is the environmental assessment, and that's concurrent with the management team. We are excited. We have momentum built with this FS. The management team that we are bringing in, they're going to be impressive, and I believe that they're going to get us where we have to go. And of course, we are all looking forward on sharing our story, talking to institutional investors, all investors, and letting them know exactly what we think is going to happen here in the next 3 or 4 months, the rest of this year, into the first quarter of 2024. We have 2 or 3 work streams working in tandem, talking to all the stakeholders, our vendors, our service providers, government officials, and we will keep everybody up to date.
Now, interestingly, we haven't seen a feasibility study for a new salt project in North America this century. Atlas Salt is a trailblazer. This is very different than a traditional mining project, is it not?
Yeah. So I think until today, it was a trailblazer. I think after today with the feasibility study, it's a game changer. So I think it's different now. The Not only is it a shallow deposit, relatively near surface, it is the greenest, cleanest underground mining project that is on the table now, and like I said, it's going to be a game changer. So pretty exciting times.
Now, before we get into the details of the feasibility study, let's talk about the production expansion scenario that's under the FS umbrella, but at a preliminary economic assessment level. And that's a scenario that delivers a pre tax $2 billion NPV at 8% and a pre tax internal rate of return of 28% based on 4 million tons per year over a 47-year mine life. Those are incredible numbers. How realistic is that?
Is it feasible? Absolutely.
Now, there are a lot of numbers in the feasibility study, which represents an improvement over the preliminary economic assessment that was released at the end of January of this year. On the screen now, we'll show some of the highlights, including pre tax and post tax figures. You can see the pre tax NPV8 is now $1 billion, and this is based on just a 2.5 million ton per year production scenario over a 34-year mine life. Will we see an update to this feasibility study at some point, or will your team be working on optimizing it?
Sure. The team that we are assembling are they're mind builders. That's what they do. They dissect a feasibility study and they find ways to build things quicker, less costs. They try to improve productivity. So I am convinced that that we will find some improvements. It's all about cost and timing. If we can put something in production sooner than later, or if we can reduce overall costs, the shareholders benefit from that. So the answer to your question is simply yes. We will find a way to optimize either time or costs, and we will keep the market abreast.
Atlas Salt has a current market cap at about $130 million, which is well below the pre-tax $1 billion net present value of the project at an 8% discount in the feasibility study. You've been in the mining business now for decades. What factors influence how close a company's valuation should be in relation to its NPV8?
Okay. Normal materials have up and downs in cycles, 4 or 5 year cycles. This is totally different. It's predictable over decades versus 4 or 5 years. And demand's outstripping supply. Um, I don't believe we can use the traditional metrics to value a business and apply it over here. For instance, the capital for this project, the initial direct costs of capital, and I'm not referring to indirect and owner's costs and contingency for 2.5 million tons is around $300 million. That is direct costs. With an NPV north of $1 billion, that is actually a low conversion rate. The fact that you invest 30 cents and you make $1 bodes very well, and it decreases the risk of the project. So I actually think it will get a higher valuation than traditional mining projects. The length, the duration, the IRR, and the fact that it is not sensitive to cycles, unlike other commodities. We are in a very safe, world-class jurisdiction, Newfoundland, Canada, to be specific. We are close to the market. Demand's outstripping supply. Those are all factors that should enable investors to determine if the NPV is 8 or 5 or 10. And by the way, if you factor in an NPV of 5, it's actually almost double that. It's not 1 billion, but it's closer to $2 billion. So I think that considering that the risk has been reduced significantly, the execution team that we are putting in place will be on the job, on the payroll sometime in September. We have momentum on our side, and we have remarkable timing with some of the older mines in the U.S. and Canada aging, becoming less productive. And keep in mind that our plan is to build the greenest, safest, and cleanest underground mine in the world. So I think that the current NPV of 8 and the market cap of 130 million, there is a disconnect, and that'll naturally adjust itself in the near term.
Now, we see a lot of numbers in this feasibility study. What's the best way to really put a value on a salt project like Great Atlantic? Because not that many people or analysts are used to evaluating this type of project.
So I think I just said it just before, it's the capex required, the direct cost versus NPV is extremely favorable. 2 is the cash conversion. The amount of cash that this project puts out, and I'll give you some numbers, and maybe I'm jumping ahead of myself now because it's so memorable. If you think about the 4 million ton scenario, 47 years of life, a predictable life that is. The revenues are around $24 billion. The cash conversion on the revenue is $17 billion. That is unheard of. That is a very healthy cash conversion, and people pay a premium for that. It de-risks the project. It has a lot of latitude. Anyhow, and I believe it'll get higher value than a traditional commodity plays.
Now, Rick, you're just a few weeks into your job with Atlas Salt. What are your general impressions in the early going?
Yeah. Remarkable timing. So I'm just going to say that the fact that I'm involved and I'm here working with Patrick Laracy, the chairman, and the board, and the existing shareholders to build and develop arguably the greenest, cleanest underground mine, as far as I know, in the world, that will last generations, is truly a great situation to be in. So I'm pleasantly surprised, and I'm going to say it and say it over again. I think the best is yet to come. So.
Some big developments. Rick LaBelle, new CEO of Atlas Salt. Thank you very much for joining me today to talk about the feasibility study and these latest developments with Atlas Salt. We look forward to having you back again soon. Thank you again.
Thank you, Cindy. Appreciate it.
And thanks to everyone who tuned in. We'll see you again next time. Bye-bye.